So you live in a high-priced market where rental investments don't make sense and you want to invest somewhere else long distance. But as you start searching, the options seem overwhelming. Which of the thousands of cities and neighborhoods are good places to invest? And how do you research a place online and trust that you're not missing something important? Now, as someone who's invested in real estate for 21 years and who owns some of my rental units thousands of miles away, I've created a framework that I use to quickly pick a great investing market. And in the rest of this video, I'm going to draw out my system for you step by step and also use free online tools that will help you pick and analyze your market so that you can start buying rental properties and building wealth as soon as possible. So I want to start by giving you 5 steps to finding a new investing market, and then I'll go into more depth on a couple of the key steps and give you some free tools that you can use to evaluate your own market. And the first step is just really simple, is to do a Google search of top fastest growing US metro areas, or whatever country you're in, do the fastest growing metro areas. But when I did this exact search, I found a particular chart in an article that I found really interesting, and it just had a list of 20 cities in the US who had a lot of growth recently and were projected to have more growth. And it was cities like number 1, Austin, Texas, Raleigh, Cary, North Carolina, Orlando, Florida, Charleston, South Carolina, Houston, Texas, Sarasota, Bradenton, Florida, San Antonio, Texas, Dallas, Fort Worth, and the list goes on. It includes some cities in Tennessee, Arizona, Charlotte, a lot of cities in the South and the West, by the way, which is an interesting bigger picture trend. But my point here is you do a search like this and you don't have to be perfect with it. If you already have an affiliation with a certain city, great, start with that. But it'd be nice to have something that already has a pretty big picture macro growth trend for that metro area. So just do a little bit of quick research on that. And I want you to pick one. And this is where if you have any personal preference or you already have an affiliation, you have family there, you have friends there, you went to the university there, whatever the reason is fine. I don't think you need to overthink this, but you pick one city because I want to go to the next step, which is called picking a sun city. And I'm going to need to explain this with a metaphor. So this is a metaphor I've been using both for myself and also helping students, that you look at these cities that are on this top 20 or top 10 list as an economic sun. So if you think about it, every investing market you're in, the tenants you rent to, the people you sell houses to, they need jobs. You need to have a good economy. And I look at the city center, the place you're going to, like Atlanta, Georgia, or Charlotte, North Carolina, or Nashville, Tennessee, or whatever the city happens to be. These are your economic suns. These are what attract major corporations, attract jobs. They have a diverse economy. And that's really the energy that's going to drive your investments. That's going to make everything else possible. And so you want to start with the sun. That's step number 2. But then step number 3, and I think this is a really important one, this has been very helpful for me as a small and mighty investor, is you want to begin with the sun, but you want to go in the same solar system. And I know my little picture of the solar system is very non-physics based here, but I had to squeeze this on the screen so I could share this with you. You want to look for these satellite cities, these planets that are orbiting around the economic sun. Now, why is that? The reason is that you want jobs and you want a good economy, but you also want to have a little town center or a small city that has its own gravity, but it also has a little bit more affordability. So if you choose Earth, let's call that whatever suburb that's going to be of the city you're evaluating, this might be like a 50,000 or 100,000 person suburb city. And I actually read a really good book a few years back called Big Shifts Ahead by John Burns. He's a real estate consultant to builders and national investors. And he used this term called surban, S-U-R-B-A-N. So it's suburban, but it has a little bit of an urban feel to it. It has a town center. I grew up in a town called Noonan, Georgia, which is in the suburbs of Atlanta. And it has an old court square. It has a character. It has old buildings. It has walkable spaces. And so that personally is what I like to invest in. I like walkable spaces. I think those are really hard to replicate. I've been trying to do that in my own town for many years. And so towns that already have this urban fabric and this structure, but they're also in a suburb and they have a big economic center nearby, I find to be really great investing locations. So we're going to dig into this a little bit more, but for your steps, you do the Google search, you find an economic sun, and then you find maybe a couple satellite cities that have promise, these smaller places in the metro area of a big economic sun. And then the next step, we're going to zoom in a little bit more on those satellite cities to see, are there some opportunities? Is this a place where there are actual affordable investments that you can buy? So that's what we're going to research a little bit more by using recent sales. So I want to give you a real life example of doing some of these steps. First, picking an economic sun, the big city, and then picking the satellite cities. And I'm going to start with an area I'm familiar with. As I told you earlier, I grew up in Atlanta, Georgia, Metro Atlanta. So Atlanta was one of those top growing cities. So is Charlotte. And there's this corridor that's called the Charlanta corridor up I-85, basically. And right in the middle of that corridor is near where I live, Greenville, South Carolina. And so this is a very vibrant economic area, just something I happen to be familiar with. So the big picture is good, but I actually have a little small sun, which is where I like to invest. Greenville, South Carolina. Greenville's a really cool small city. It's got an awesome downtown, has a waterfall right in the downtown. It has big industry like BMW and Michelin are in the community. There's lots of tourism. There's really beautiful mountains nearby. It's only a couple hours from the coast, 2 or 3 hours from the coast. So you can tell I know a lot about the town, but that is our little economic sun in the upstate of South Carolina. So that's where I'm starting here, Greenville, South Carolina. But I want to even pick a smaller, satellite city from there. And so there's a lot of choices here. There's Taylor's, South Carolina. There's Greer. There's Travelers Rest. There's Simpsonville. There's Piedmont. But I'm going to choose one for this demonstration called Easley, South Carolina, that I'm familiar with. And why do I like Easley? If you could do a little quick search on Easley, or any town you're looking at on Wikipedia. It is a town that has about 20,000 people, 22,000 people. It's in a county called Pickens County. So it's right nearby the economic sun of Greenville, but it's a little cheaper taxes. It's a very easy commute, like 20 minutes, 15 minutes in some cases to get to the economic sun. So it's a perfect commuter village. But it meets my criteria of being that suburban place. So it has its own little kind of old downtown area here. It's got a lot of shopping, a lot of things to do. It's a pretty good housing stock, and there's lots of new housing being built as well. But there's also a lot of old housing stock that you can remodel, which is important if you're trying to do the BRRRR strategy or flip houses or just find properties that are cheap. So depending on what you want, new houses, old houses, it has it in this little town, and it's convenient. That's just like a very quick analysis of how I would look at this, and I happen to be familiar with it. But what I want to do now is, now that you've chosen the sun and you've chosen the satellite city, or maybe you have 2 or 3 satellite cities, I want to go to the next step on our list, which is actually doing some research to see, are there actually deals here? And you can do it really quickly. And I'm going to use a free tool called Zillow, which you're probably familiar with. You could also use Redfin or others to do this quick analysis. So even though I've done a big picture analysis and I like Easley for that reason, what I really want to know is, are there any real estate deals there? Are there any people who've bought properties at prices that would make sense for me? And the first thing I'd like to look at is, I'm buying long-term rental properties in this example. So I want to get an idea, like what are the rents in Easley? So you can go to Zillow. I just did a Google Zillow rents, average rents, Easley, South Carolina. And this came up where they have like a market report. And they'll tell you that the median rent in Easley is $1,750 per month. You can actually change the home types. I'm actually just buying houses and townhomes, so I could change that up to see it's a little bit higher for houses, $2,000 a month. But you can look at both of those. And houses, what I want to really see is, what's the range of rents. And so the average is $2,000 for houses, $1,750 for all properties. There's also a range. There's others at $2,100, $2,200, but you don't want to be way off the range. You want to just get an idea. Okay, most houses are $1,500 to $2,000. That's good to know, because then we're going to go look at what properties are selling for. And so I want to show you a search I do inside of Zillow that basically mirrors my buy box. And my buy box is a concept where you narrow down what it is you're looking for, the type of property, the location. So we're looking in Easley, South Carolina. But I actually do a search based on some other criteria. I'm looking just, in this case, just for houses and townhouses. I don't want condos. I'll do a separate search for multifamily. I don't want lots. I don't want apartments, mobile homes, anything like that for now. I want properties that are 3 bedrooms or more. Although, sometimes I'll search for 2 bedrooms or more. Actually, let me do that for 2 bedrooms or more, because sometimes you can get a house that's 1,500 square feet with 2 bedrooms. You can turn one of the extra spaces into bedrooms. So I don't want to eliminate too many, but I'm just going to narrow that down a little bit. And then I'm going to do a price search with a max of 200,000 and a minimum of $10,000, because you're going to get some little searches there where you get properties for $100 or $1,000 that are probably either for rent or they were transferred within the family. Those are usually errors. And I'm going to max out at 200,000 for the reason that I'm looking to see were any properties sold that would have been a good deal for me. Because if a property rents for $1,500 to $2,000, it meets my criteria. That's about where I want to be. You might have heard of the 1% rule, where if you buy a property for $200,000 and it rents for $2,000, it would meet the 1% rule. That would be great in my case, in a nice location. But I'll even go beyond that. So if a property rents for $1,500 and I can still buy it for $200,000 and it's in a good location, that would still make sense for me. So I want to see if they're just to start. I could kind of increase that price if I wanted to see what's up, if there's anything like that in easily. So I zoom in, and the key here, when you go to the Zillow search, I've already showed you some of the things I do. You want to switch it from for sale to sold. You want to see properties that have actually sold, not just the ones for sale, because you want to see if any other investors have bought properties that you would like. And then my final filter here is I'm going to do max 2,500 square feet, built in 1979 or earlier. So I want, or later, I'm sorry. So I want newer properties. And then I want to do, very importantly, any house that's sold in the last 12 months. So I just want to see in the last year, how is this going? And here's what we got. You have a list here. It's very, very useful to see. And I sort of price low to high. I want to see the lowest prices. And I want to get a little jealous. I want to get a little FOMO. That would be a positive sign. If I see that people are buying properties that as I dig into them, I would probably want to buy. So let's look at this list. Some of these I'm going to kind of throw out. $30,000 for what looks like a decent house. That might have been a mistake. That house is probably worth $200,000 or $300,000. So I'm going to throw out some of the low ones. Here's a 2-bedroom, 1-bath for $60,000. Looks interesting. Not exactly my style. I'm going to try to go a little bit different. Here's one that's interesting. 202 Arlington Avenue. So you can kind of highlight it and see it. It's on the map. It's near downtown easily, which I like. Let's kind of dig into that one a little bit. Sold for $80,000 in the end of 2023, 3-bedroom, 1.5-bath, 1,296 square feet. It's estimate 247. So I don't know if that's accurate or not, but that's interesting. So I'll just dig into this and see the home details. Was it for sale? Don't know if it's for sale or not. I like to see the year it was built, 1981. That's a positive for me. Square footage we already saw is 1,300 square feet. And I like to see like what happened on the sale. So it was originally listed for rent recently for $1,850 and then $1,775. So somebody bought it since they bought this property in December. They've now rented it about 3 months later. That's a good sign. $1,775 to $1,850. They bought it for $80,000. Now, what I don't know is, did this house need a total gut remodel? Maybe, that's possible. But somebody got a really good deal, even if they bought it for 80 and put $80,000 into it and fixing it up. If they rent it for $1,850 or $1,775, that's a really good deal. This is a location I like. This is a price I like. Check one. I like what I'm seeing so far. Somebody, that could have been me. If I was on marketing to buy that property, I could have done that. So that's step one. See how quick that was? Just doing a quick analysis. Let's look at some more properties. Here's a townhouse. So it's a little different type of product. 2-bedroom, 2-bath, 991 square feet, $150,000 was the sales price. Let's see if we can estimate what this property would rent for. I think that's a good step here. So you can do as another tool on Zillow or also Bigger Pockets where you can estimate the average rent. So if you just search Zillow Rent Estimator, they have a free tool. You can then just put the address of this property in and they'll narrow it down for you. And they'll tell you specifically on this property what they think this property would rent for. So 1,244 is what the rent estimate is. They also give you a range of 1,000 to 1,629. So a little bit smaller property, 960, only 2 bedrooms. So it's a little different than the houses we've looked at, which might have been $1,700 to $2,000. But still, the property sold for $150, rest for $1,244. This is interesting. This is within the range, and you can go look at a lot of the comps to see what else is selling. If that's a good location in a townhouse, I like those numbers. I like the fact that it's fairly new. I could look for new construction properties, or maybe they're just a few years old. Or was that 101 Pendleton? So just based on the little quick analysis I've done, I'm like, all right, another positive. Seems pretty interesting. And then let me look at one more just to show you how I might look at this. Redfern. And 3-bedroom, 2-bath, 1,600 square foot. So this looks like a relatively new property, probably built in the early 2000s. I'm interested because I think properties rent for $1,500 to $2,000 and it sold for $150. Let me click on that and take a look at it. Sold in 2024. His estimate's $255. It sold for $151. Interesting, right? Let's look at some details. Sometimes you'll see the description of the property tells you some clues. It said property sold as is, buyer's agent to verify all info for accuracy. That screams that it was a foreclosure, meaning a bank owned that property. Or somebody, even another owner, didn't want to do any work to it when they said sold as is, buyers to verify all information. That means, hey, take it or leave it the way it is. We're not going to make any warranties to you about it. I like to buy those kind of properties, so I sometimes search for that when I'm looking at properties. It was built in 2006, and the price history, it sold in 2015 for $92. It sold in 2024 for $151 at $95 a square foot. And this property, let's look at the rent on this one. Just do one more estimate to show you what I look for. Let's go back and type this address in. and it says estimated $1,690 per month. Could be 1,600 to 1,774, and you could do a little bit more digging. Like I would actually do almost like an appraisal. I would look at 2 or 3 comps to see, hey, is this one better than mine? Is this one worse? And I try to figure out exactly what the range of my rent would be. And so the fact that it's around 1,600 to 1,700 square feet, $1,600 to $1,700 per month, and somebody bought it for 150 is again in my buy box. If I could be close to the 1% rule, I was not even estimating that I could get that close to it. Usually I have to pay a little bit more for a property, but all of this is really positive. So if you went to a market and you started seeing this kind of data, you already like the Sun City, you've done a lot of research on that, you like this little satellite city, and now you've looked at actual sold properties. People bought these properties in the last 12 months. They met your criteria for a buy box, and they're within the price range that you would maybe pay. You could do this for 15 minutes, 20 minutes, 30 minutes, whatever. Find 3, 4, 5, 10 examples that make you believe that you could probably do this too. And now you've got it. You've got a realistic estimate that you could go buy in this market. And now you can start moving to the next steps. And I want to talk about that 5th step now, which is really crucial. Once you've done this data analysis, you've got some excitement about this location. There's one more step that will be kind of the bridge to you actually being able to buy properties in this location. So just to review real quickly, there's 5 steps for finding a new market that'll fit your investing criteria. Number 1, do that Google search to try to find an economic sun. That's step number 2. And then number 3, find a satellite city. I like those suburban locations outside of the town where there's a little bit more affordability, a kind of smaller place within the gravity of that economic sun. And then number 4, do that last step that I showed you, research recent sales. You want to prove to yourself that there's actually deals in the market, and you can do that by looking at actual sold properties like the ones you want to buy. But then the 5th step, to kind of connect all this is really just theory because you've seen other people doing it. You actually need to go and buy these properties yourself. And the final piece of the puzzle is making sure you can find key team members. So you might have heard other real estate investor YouTubers and people out there who talk about, like David Green, who's written a lot of books for Bigger Pockets, talks about his core 4, that you want to find a real estate agent, you want to find a property manager, and you want to find a lender, and you want to find a contractor. Well, all of those are really important. And so it's particularly an agent, and I would say a property manager for me. If I'm investing long distance, I like to have a property manager who's also an agent who can go and look at the properties for me. I can show this list of properties I looked on Zillow and say, I'd like to find more properties like this. Do you think that's possible? We'll put a strategy together. But this is number 5, and this is the bridge step, because these are the people who can actually help you find those deals, help you manage them. And actually, I want to share with you another video which will help you do this. We'll show you an example of an investor from Washington State, and I interviewed him to talk about how did he build this team for himself. And he actually has something really surprising. He has a person who's not on this list who he says is his number 1 person he would look for when he goes to a new market. So check this video out. I interview him and talk about how do you find and build a team long distance so that you can put all of this together and start buying good deals for yourself. If you're watching on YouTube, there'll be a thumbnail you can click on above me. Or if you're listening to the podcast or watching on YouTube, you can click on the link in the description below. Thanks for watching, and I'll see you in the next video.